I bet you must heard of Dow Jones and S&P 500. But just what exactly is Dow and S&P 500? All the people out there always pay attention to these number of Dow and S&P 500. These numbers is actually represent the stock indexes. In this video, I will fully explain to you regarding the Dow Jones and S&P 500. Before you move on, make sure you have clicked the subscribe button and the bell icon for latest update. Well, let's get started. What is the usage of Dow and S&P? The Dow and S&P is the stock market index. Both of them are used as an indicator to track down the stock market performance. What is the difference between them? Dow comprised of 30 blue-chip companies, in which they are from all major sector except that from utilities and transportation. While the S&P is comprised of total of 500 large companies from all major sector. The blue chip here means the company that is well established and financial stable company. These include some popular company like IBM, Intel, McDonald's, Disney, HP, and many others. All these company has a very good reputation, quality, and profitability. The definition of the 500 large companies here simply means the market capitalization of the company is more than 8.2 billion. Another differences is that the method of weighting and calculation. Dow is price-weighted index, while S&P is free-float capitalization-weighted index. To understand this, we have to familiar with the formula and calculation. Simple, take the prices of the 30 companies and divide by the number of companies. This simple give you the arithmetic average of the price. We are going to take the average and divide by a divisor. The divisor here is used to smooth out the changes by issue of stock split, or dividend, so that the index is only affected by the price movement. For the S&P, we have the formula of market capitalization multiple with the float and divide by putting the divisor. Market cap is calculated by taking price per share to multiply with the total number of shares outstanding. Market cap is actually the value of the company. The float here is the percentage of the share tradable, or the share in the market that is free to trade. That's why S&P is weighted by free float method. The divisor here perform the same function as the divisor over here. Hence the S&P 500 is also affected only by the price movement. If the S&P and Dow had dropped, it simply means the stock price of certain company is going down and the market is performed badly. In Dow, the company with higher price will have larger effect on the movement of Dow. For S&P, it is the market cap. The company with larger market cap will have larger effect on the movement. You may be thinking, what is the criteria for the company to get listed in the index? For Dow, there is no specific rule. But the companies must be large enterprise that represent the significant portion of the economy activity in United States. Example are like Apple and Microsoft, which have business globally. This global business has huge effect on economy activity in US. For the S&P, to get listed in it, a company must be US based, have market cap of over 8.2 billion. At least 50% of the corporation's stock must be available to the public. Have 4 consecutive quarters of positive earnings. The stock price must be above $1 per share. I bet you had heard of the Berkshire Hathaway company. It is the company owned by the greatest investor, Warren Buffett. Why the Berkshire is in S&P but not in the Dow Jones Index? This question I will leave it to you to solve it. Nevertheless, majority of the people out there prefer S&P 500 over the Dow Jones in certain aspect. They prefer the S&P as it contains 500 companies in it. And it represent the 80% market cap of the total market cap. Since it had greater number of companies in it, this just give them a overall greater evaluation on the stock market performance. This conclude the video, and I hope you had learned and fully understand the Dow and S&P. And remember this quote: the more you learn, the more you earn. Thank you for watching. Please like our video and subscribe to our channel for more upcoming video. Road to Invest.